Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have strong green arrows around the world today as Asia's, I'm combining Europe and Asia. They were both good.
Yeah, both higher.
Yes. Asia's trade data was better than expected. The Nikkei is up 2.8% and the Shanghai about 1.4%.
Yep.
Europe is also broadly lower with the DAX just north of 2%. So a bit of a tailwind here, right? Overseas?
Yes. Overseas are very strong. So when overseas is strong, following our lead yesterday, it does help the futures. But I think, the trade data that did come out better than expected, I guess didn't squash the fears that growth is slowing in China, but it's giving it a bit of a relief rally. It's been hard to get a big move there, and now you have the Nikkei up over 2.8%, and the Shanghai looking good, and Europe broadly higher, so it's helping things over here. If you take a quick look at the FXI, which we'll get into first, which is for Asia. Asia did turn up yesterday. We've talked about this channel, and it's been going sideways. And at least you're getting some upside follow through. Upside follow through has been hard to find. If the FXI can get above this area, who knows? Maybe it marches all the way to the 200-day. This spot right here on the FXI is 34.12, and it probably will open above that. We'll see if it holds above that, today. As far as Europe and the DAX, which we use as a proxy, it too is still trapped in a downtrend. Okay, but things are tradable. Yesterday the EWG perked up again. Okay, did a red dog reversal right there in the middle of the range, showing that some buyers took back control. And now today, it's up over 2%, and it could see at least a gap fill to this spot, which is about 25.73. So overall, a bit of a tailwind overseas, but it's really following our lead.
Yesterday, markets held the 21-day moving average and closed strong. This put you in the portfolio approach, which you haven't been in for a while. Can you kind of explain to us what that means?
It means when you're in a rally and you're above the 21-day moving average, sometimes instead of just day trading, or active trading, you want to be in things that are trending. And for the past, I would say, week and a half, we haven't trended at all. It's been very, very choppy. But yesterday it seemed as if things woke up where I put on north of 5 positions. I think I have 7 or 8. Where now I will try and stay in some and add to some based on the market action and the chart patterns, which we'll get into. But I also have a small hedge on, so I will trade around the hedge with my longs. So, again, we'll get into that. Instead of just being in tactical approach, I did go back to portfolio approach, and we'll see how long that lasts. If you look here at the chart of the SPX, you will see this is the reason why. First of all, Chelsea said we held the 21-day moving average, which was right here. I did come in yesterday with a little bit of short on the brain, thinking we were going to break this, and we did not. What we did is we went below 2,041 to, not by much, by 2 handles, and then came back above. So on that little switch, if you were short, you could have gotten long, or if you were short, you could have covered. And then as the day went on, okay, things grinded higher, and a lot of different sectors acted very well. So if you look here now, the question is, can it get above this spot today, 2075, and close above it, or does it stall a little bit ahead of it? But overall, I would think if we hold at least 50% of today's gap up, I think that we could be on. I hate to say it because people bash any bull out there. It could be on the road to 2100 at some point. If earnings season, which already started and it's doing okay, hangs in there.
Most sectors did a red dog reversal yesterday, which is good for our community as we know that tactic well. Can you go ahead and show us the charts for the Qs, small caps, and bios?
I would love to. And they do know it well because we've done seminars on how to use that tactic in all different areas of the market. So, everyone loves to, they're like, red dog, why do you call it the red dog reversal? Well, if you watch a seminar, you'll see why. It's not a drink or a bad nightly activity. But anyway, it's a tactic to keep you safe and on the right side of things at times. Because yesterday, I talked about the Qs. I'm like, if the Qs get below 108.60, it could decline and correct more. But the question is, can it stay below it? If it can't stay below it, then it comes back above it. That's the actual red dog reversal. So let's take a quick look here. All right, the Qs had this upper range where you weren't sure whether or not it was going to break lower. And what happened was it broke below this 108.58, put a low in at 108.02, So you actually could have made quick money short it earlier on and then reclaimed it, and now you have this, bull flag. So it goes from faulty to flag, depending on whether or not it holds. So anyway, it did hold, and it's it's opening up today. So I'd say resistance for the Qs is right here at about 110.71. So we'll see whether or not some sellers come out there or it gets above it. You still have an open gap all the way till about 112, and then those are the old highs. If you take a look at the Russell, the IWMs also held the 21-day, so at least it's one thing not to be long, that's fine, but at least you could have covered when this held, because again, this trend is strong, and until a trend breaks, it's usually your friend. Oh, the trend is your friend. I never heard that before. Anyway, this is your prior high. Your prior high here is 111.22, and then the 200-day, and then Chelsea wants me to talk about the bios. So, oh, look at that! What a quinky dink! It did a red dog reversal right here. Okay, the red dog reversal was around this pivot, which is 271.70, traded below, came back above. So if you were short from this small red dog reversal, at least you're covered, and maybe you got long. If you got long, I would trim a little bit, into 280, and then maybe hold a little bit, because that could be another pivot for better prices there in the bios.
Oil ignited yesterday on some talk that there might be an output freeze again. Do you think that the XLE can take out monthly highs?
I think today it might digest, but yesterday's move was so strong that it looks like it, it might have even done it yesterday. Let me go check. XLE, if you look at the chart here, did hold, oh, look at that, did hold this, spot going, if you look back when everyone started talking real bearish again. And again, if you sold when it broke the 8-day right here, you were able to rebuy it when it reclaimed it versus, getting caught. And yesterday it took out this 2-day pivot. And now you have the 200-day right there. You have old resistance right here. So it might pause here for a session or so and then continue. But just realize how far the XLE has come down. So if all you want to do is short this thing because it broke down last year, this is when it was a short, okay? When you had this head and shoulders top right here and it broke the trend line. Or this is when it was a short, when it broke support here and then continued down, or the retest. So for this, I would just be a little careful. You have a big time trend here, and it's starting to perhaps change. I wouldn't go off and buy your first, lot here after missing this move, but again, be careful being a little short there, because if oil does want to hang in there and go towards 50, this thing probably makes its way back to, at least 68 to 70. So just know that it can happen, and even though this seems like a big rally, it came from a lot higher.
JP Morgan is out with earnings that beat lower expectations. Do you think that the strength can hold?
The expectations for all the banks were really lower, and people talked about a reflex rally, and actually they were right. Usually not people, they say it on TV and it never happens. But anyway, JP Morgan did come in pretty healthy compared to the lowered expectations, and the stock's up. If you want to see a pivot here, basically this is it. Okay, the question is, can JP Morgan get above this and stay above this, which is up above it pre-market, which is about 61. So if you look overall, the banks have done absolutely nothing. You had a cluster here lower, cluster here lower. Now it seems as if maybe it could hold up. I wouldn't, to be honest, I probably wouldn't chase JP Morgan here, but I don't know if you shorted either. Just know where this pivot is and know where the 200-day is. If it happens to open here and reverses down, that probably wouldn't be great for the market. But if it holds up, let it put a gap in to trade verse and then figure out if you can get some more upside. If you look at some other banks, they also have been broken and doing nothing. So look at some pivots here to see where there's room to get to. If JP Morgan gets above that spot, maybe Bank of America works its way back to 14 and then a little bit higher. If you want to look at Goldman Sachs also hasn't done anything at all. It held this support right there, and now you have pretty much room to this spot. So I would say with the banks, they're broken, they're not leading, but maybe they play a little bit of catch up. So if you just have short on the brain with the banks, you better be careful that that there's resistance higher, and they've done absolutely nothing this year.
High beta tech woke up yesterday, which is always good to see. I know that we usually focus on Google, Amazon, and Netflix. Which ones did you buy yesterday?
Which one of those three?
Yes.
All right, I'll tell you right now. If you watched the recap yesterday, you found out, and if you're on the VTF, you also already know. So anyway, Netflix. Netflix is the one that I have the most size in. If you look at the chart of Netflix, you'll see you had a very big engulfing day yesterday and the red dog reversal. and it closed above the moving average. So I do have Netflix, and up $1 or so, I usually sell a little bit. That's what I do in portfolio approach. I sell a little bit, and then I'll try and hold some. There's really I guess it could see close to 110 or 112 or so. Day one, maybe we get a day two, day three. I also bought Amazon yesterday. Amazon has looked really good. You had this V bottom right here, okay, and then it basically held this prior pivot for almost 2 weeks, and then finally looked as if it was going to close strong and get above this. So I am in some, so up $3-4. I usually sell some, and I guess there's some room towards this 620 or maybe even 640. So I'm in that, and Google looks okay too. I'm not in Google though. I just a little loose and wide for me. It did a red dog reversal yesterday, around the 21-day moving average, and now I guess see if it can take out 770 or 772. Maybe it'll be a decent day trade if it holds up and you're into loose and wide stocks and you can handle it. Perhaps above 770, it gets a little momentum, and it's pretty close, to the all-time highs. And if you remember, Google was one of the few that had good earnings last quarter.
Facebook has its developer conference and got upgraded by JP Morgan. Did you buy that as it reclaimed the 50-day?
I did take it home overnight. It didn't look great, but I figured it had a little room. So with that being said, JP Morgan's upgrade is helping it this morning. If you look at the chart, it didn't do a red dog reversal yesterday, but it did hold that pivot that Chelsea and I talked about. Sometimes if it holds the pivot, it doesn't give the shorts a way out by breaking below it and coming back. So for me, I thought perhaps, take it out long, maybe you get a move to the 111.70, which would have been the prior breakdown, and this morning it looks like it's 112. I will definitely be selling some into this area, and then maybe I'll hold some and see if the gap holds. The market continues higher. I know people said it went down because it was supposed to lose like 20% of their biggest advertising clients, which no one's heard of that happening. So who knows? Maybe this was just a buyable pullback, and then come earnings time, if they if they come out great and they blockbuster move, that's the pivot there. But for now, I will sell some and hold some. I guess you could say that if it does take back this 111.70-ish, there's probably room a little bit towards 112.50, 112.70.
Apple was upgraded by Goldman yesterday. Do you think it could finally close above the 200-day for the first time this year?
It would be nice, considering that most of the public does own Apple, and it was a big headwind last year, and so far this year it's been acting better technically. It hasn't been above the 200-day, and today it's opening above it. It would be nice if it holds above it, and extends a little bit. I am long Apple as of yesterday too. I actually got it when it went green, and I'm still in a decent amount. If you look here, Apple last year was pretty big tailwinds, right? It had a few different spots where gap down, broke support, here broke trend, and then this year, this was a nice tradable move. I remember putting that chart up, and here's when it held, and then here it held again, and now it went sideways for almost a week or so and closed strong. So I'm in some of that. I'd love to see it get above this 200-day and get back to at least test this 112-ish. And if it can get above 112-ish, maybe your next spot gets a little bit closer to this 116. But what I usually do is I sell a little bit when it's up 60-70 cents, and then I see if it still remains strong and holds, I could add to it for potentially a better move. But closing above the 200-day would be very constructive, and you have the 8-day curling up and held above the 21-day, which is stronger than some other things out there. So let's hope it gives you some decent follow through today.
We haven't talked about BABA lately, but it has consolidated. Will this be a focus for you today?
BABA is like my nemesis. Every time it looks great, it doesn't work. And yesterday, towards the end of the day, we're talking on the VTF. I'm like, oh, BABA is pretty tight. It's been holding up well. So I went long a little BABA yesterday. It's on the VTF as a long. I think this is one that I could try and focus on and add to, because if you look at the pattern here, it's still strong. It's not extended. Okay, it's still well off the other resistance. First of all, look where BABA used to be. Remember that whole move? This was little memory lane. Remember when it broke above this and hit that spot before it's stuck in the downtrend all the way to here. But anyway, let's talk where it is now. So let's get a little closer here. This was the the gap up that reignited this move, okay? And then look how tight it is right here. Getting very tight above the 8 and 21 day. It's going to probably open a little bit above this. If it could stay above it, I do think that you could potentially add for a trade north of this, what is that, 99.84. and there is an open gap to be filled all the way to around 82. So with the Shanghai up and the HK up and the Nikkei up, I would think that maybe some flows come into the, this China internet stock to get to that area, but we shall see.
Metals are trading lower today with the dollar strength.
Well, that's a correlation. So usually, like when the dollar's lower, you have commodities higher. When the dollar's up, metals and commodities get beat up a little bit.
Okay. And so now, what level in the GLD needs to hold for you to keep it?
The moving averages are below. I am long GLD still, so being long that is a balanced approach. Having a little gold, I'm also short a little spiders, so I'm going to have to trade around that with all my longs. So that's what a balanced portfolio approach is. But if things start to look different, then I get rid of some stuff. So yesterday, gold closed well. So even with the market closing well, so we'll see what happens today. The moving averages are below, so it's already filling this gap. I would say if it holds this spot here, like 118.30, I'll stay with it. Maybe I'll even add versus a 15-minute low for it to just hold in there. It's near highs. I still think the gold story. I usually at this point there are a lot of people out there who love gold and they think it's going to 2,000, 3,000. I'm just playing it technically, and it's above the 8-21 day. If it starts to break below this, I'll get out of the way. It's been a decent move for 2016, and last time the market had a big move, it consolidated pretty well. It just doesn't like to go up when equities are making new highs or close to them.
Great. Do you have any other closing thoughts, as it seems like we're managing multiple positions today? Got to get ready, have a good breakfast, get ready to trade.
Yeah. Good breakfast is good, right? Breakfast of champions. So we'll see. It will be a busier day, and at this point, I'm going to see if I could, sell some strength and hold on to some positions, see if some new setups pop up. Manage my, my hedges. If we hold above, if you look at the spiders here, if we hold above this 207 spot, okay, for 30 to 60 minutes, I'm just probably going to sell it, because if it holds and closes above this, then again, the resistance higher comes all the way here. So I'm not going to just roll it up. And this was a day one, so you could get day 2, day 3. Who knows? Every time, like, remember this consolidation, you had 5 days. Remember this consolidation, you had boom. You had so at this point, I'm not going to let this, take away too much money out of the good longs. But if we go here, trade above it, and then come back below it, real quickly, maybe I'll add to my hedge and trade around it. And then we'll see, what kind of positions I have left at the end of the day. If we have a strong day, maybe I put a hedge back on. If we hold and extend or not, we shall see. Follow along on the VTF and make sure you follow me on Twitter, because I will give you some clues.
Thank you. Everyone have a great trading day.